Stephen Biggins, Managing Director of Core Lithium. The release of our feasibility studies this week confirms that Core Lithium is construction ready to build a low-risk, long-term, high-quality lithium project in Northern Australia with excellent economics, low Capex and very competitive operating costs.
Stephen, welcome back. I haven't seen you since May, but obviously the results of the DFS came out today. I think people are pleasing result, I think, judging by the stock market. Is that the reception you got? Yeah,
we've had an excellent response to the sort of presentations that we've given and the quality of the information that's in our feasibility study. I think first and foremost, it shows that we are construction ready. We've got a fully approved lithium project. There's DFS out now. We're ready to finance the project. And the project has excellent economics, low Capex, competitive operating costs and excellent return.
Okay, well, let's get through some of the numbers in a second just to kind of highlight those. But the big question it needed to answer, I get, for the market was about, are you going to be able to get this thing financed? And if so, what does that look like? Again, was that the pushback that you were getting when you were sort of talking people through the numbers today?
Yeah, I think finance markets are really keen to support us. So, let's not forget we've got 40 million cash in the bank right now. The Capex for the project is only $89 million. What we're expecting to be, a significant boost, a leg up on project finance will be from our customers. And, right at this very moment, we're negotiating with a number of parties for further offtake, but alongside those offtake would be a significant customer project finance support, which would then leave us with a relatively small sort of financing task. Alongside that, and really that was the key objective of completing the DFS, was so that we could present the project now to debt finance markets, and we have a number of parties that are very keen to consider preparing a debt finance piece for the project as well.
Right. So you've stated previously, certainly to us and I guess the market as well, that you're going to get this financing in place by the end of the year, or certainly that's your aim. Mm-hmm. Does today's numbers give you confidence that you're going to be able to get that done, or or do you know a little bit more than you're currently able to say with regards to how you're going to structure this thing? I get you've got partners, but what does that mean?
Well, I think what the excellent economics of the project show and the low Capex is that we have a bunch of financing options that open up to us. So I don't see there's any risk that we'll finance the project. It's just we've got great alternatives to compare to provide the right cost of capital and the right sort of risk profile to that finance. Financial markets are open. They're keen to support us. Our customers are keen to support us to get into production. And we're at the right place and the right time with this project for that to work successfully.
But timing-wise, because like I say, I think that this is the long pole in the tent for everyone. It's like timing-wise. You said by the end of the year. Are you going to get it done by the end of the year?
Yes. Yep. So we're putting our contracts in place right now. We signed up a power supply connection agreement a couple of weeks ago. We're working on our mining agreement right now. We've got EPC agreement, which we're working on right now. We're recruiting, we're putting in our organisational systems in place. So yes, we're as an organisation being construction ready. The DFS puts out the economics, the engineering and mining engineering in place. As I said, we now have debt finance opportunities, we have customer finance opportunities, we have equity market finance opportunities. And the finance piece for the project, giving it 89 million Capex, we've got $40 million cash already, is not going to be a difficult task.
Okay. A couple of the things that you needed to get over, we said you'd get over, certainly by end of 2022, was obviously resource increase and extending the life of mine. Currently 8 years-ish. You want to get it 10 years plus, because I think that's another thing the market is looking for. So how are you going to do that? I spend money to do that and get this financing underway. I get the 40 million bucks in the bank, and I get you've got offtake partners, etc. But are you going to be able to allocate enough money to be able to deliver against those two targets? Increased resource, extended life of mine.
Yeah, sure. In regards to 10-year mine life, we've proven that with the studies this week. So the DFS, along with the extension scoping study, shows that we've got a 10-year life of mine. It's there, it's clear, it's in black and white. And really what we're now doing is investing actively into resource drilling alongside an acquisition that we made earlier this year to expand our resources and life of mine in the project. We've got 3 rigs on site right now. We're investing into that process. We're really confident based on the fact that we've defined already an exploration target of 10 to 16 million tonnes, that in about 15 months' time from where we are, we'll be more than doubling our resources and life of mine of the project.
Okay, fantastic. So why don't you kind of remind us the some of the numbers that came out of that? Obviously, you've gone from 8 years to 10 years. You've gone from 7.4 million tonnes to 9.8 million tonnes. Operating costs have gone up marginally. But what else should we be looking at? I guess the Capex staying the same.
Yeah, I would say, look, the Capex, 89 million, that's come in as we said it would. It's low. That sets us up for an excellent sort of return on investment of over 50%. Our cash operating costs are $364 US a tonne for life of mine. We've actually been a little bit more transparent than probably the market to date, sort of the peers to date in, showing our all sustaining costs, which are in the low 400s, and they, still has, huge margins on where the lithium price is forecast to be, and even larger margins based on where the spot price is right now.
So where do you think you need to get this thing through to? NPV 8 of circa, 260 million Aussie is a good start, but how much bigger does this resource need to get to become a sort of meaningful producer? Yeah,
no, it is meaningful. So the project will be producing close to 200,000 tonnes per annum. And if you look at Galaxy's production from last year and you look at Pilbara's production from last year, both those guys didn't produce 200,000 tonnes. So it's directly comparable to the other Australian producers in regards to production. Our production, will contribute something like 10% of Australia's current production when we're going. It's we're well placed to move this project into production right now.
So, but do you think you want to compare yourself to Australian players? I mean, what ambition do you have? Because one of the other targets you set yourself was, M&A, for instance.
Yeah, so we've certainly made that acquisition move, a few months ago. That's paying off now with now an exploration target. We're drilling, on that acquisition ground right now. And what the aim there is, Matthew, is to position ourselves, lay the foundation for expansion of production from the project in the future. Based on us looking to leverage the asset that we have and extract its full value. We're also responding really to the messages we're getting directly from the market. So, we could probably sell a product that we're looking to produce, 4, 5, 6 times over based on the level of demand we're receiving. So we're listening to that. And so we're investing now into that drilling to lay the foundation for us to look at doubling capacity of the project in 2024.
I mean, let's just talk about that, because we had on the Lithium show earlier this week with lots of conversations around M&A. There's a lot of, obviously Ganfeng buying up a few companies, and it gives us a sense of the multiples that are being achieved, or the premiums that are being achieved by some of these companies. You obviously, first you've got to get this thing funded and into production, is a good start. But in terms of the conversations that you're having in the market with OEMs and other off-takers, I know you've got 40% of your offtake is already, in terms of a contract, you've got that in place. But who else is approaching you? When you say you could have sold it 4 or 5 times more, is it starting to get a little bit heated out there, a little bit more interesting?
Yeah. I think the lithium battery supply chain is concerned that it can't get access to enough spodumene going forward. And that's not even talking about for the market right now, which is really acute. So there was quite strong bidding for shipments coming out, the last shipment coming out of Australia. And I'm not sure if you've heard, but the last shipment that went out of Australia was priced over $1,000 US a tonne FOB, right? So the market is tight. And we've developed some good relationships, with obviously with Yahua as a foundation customer, but there are other sort of converters in China, but even further down the supply chain, cathode manufacturers, battery manufacturers, and the OEMs themselves.
So do you, and as your thinking changed in terms of where this goes, if you can sell it all into Asia, you'll just sell it all into Asia. There's no kind of premium to be got out by focusing on Europe.
Well, I think at this stage, all the conversion capacity, processing capacity is in Asia. So so that will be the focus of the Australian industry as it is right now. So that's certainly how we would expect the project to begin. But our expectation is that as the lithium battery supply chain broadens, through US and Europe, and also sort of conversion capacity expands around the globe, that opens up the customers. But currently, we've got good relationships with our customers in China.
Okay, it's been a sort of funny period for lithium. Obviously there was all the gains just after, was the beginning of the year, and it's been kind of flat, trading flat and sideways since. But lithium prices continue on their steady march up. So what's the disconnect? Was it a case of having to backfill your valuations in the lithium space, or what do you say? What do you feel is going on in the market at the moment? Because I don't quite get it.
Yeah, as we sort of probably talked about, sort of 18 months ago, was a lack of investment in new supply. We soldiered on, we kept persistent with what we were doing so that the project was ready to build at this time, at the right time. But there was, significant lack of investment around the globe in new lithium supply for the last couple of years. There's obviously, there's producers who will look to expand production, but, some really good work that's coming out of Benchmark and Simon Moore's group, which shows that, and others that show that that the EV goals of sales of car manufacturers at this stage are more likely to be limited by lithium supply than they are by customer demand. Because the world, current globe, it's taken decades to get to this level of global supply, but the world needs to do that 8 times over in the next 9 years.
It's interesting, actually. So you've got a bunch of the research companies, talking about that supply gap there. But I'm talking to bankers or even CEOs of other battery commodities, going, "Oh well, there's plenty of lithium. There's loads of lithium because the big guys will just turn up the volume. It'll, the market doesn't need to worry about where it can access lithium." But the reality is somewhat different because it's a technical commodity in the sense that you need technical expertise to be able to process this in whatever form you want it. And I think that's the bit that perhaps people are missing here. And that's why companies like Ganfeng are walking in and buying up. I think we've talked about three acquisitions they've made in the last month, well, a couple of months. So when you were talking to the brokers, when you're talking to bankers, do they have that same disconnect? Are you having to get them up to speed, or are they walking in fully prepared?
I think they're starting to recognise, and the globe's starting to recognise, that the length of time and the difficulty needed to establish a new mining project globally. And we've been through that process persistently over the last 5.5 years. I mean, for example, if you look at Rio Tinto, who announced in the last 48 hours that they're going to invest $2.4 billion into developing their Jadar project. They discovered that in 2004, 2005, right? And it's not going to get in production until 2026. So that's taken 20 years, right, to go from that point and billions of dollars of investment. So that's how long it takes to sort of build a good quality mining project. And I think sort of, I get a feeling that the OEMs, the auto industry, sort of hasn't appreciated that. But there's now, the world's starting to wake up that, you need to invest in those mining projects. And I think the other thing, Matthew, is that, having a fully approved mining project in a tier 1 mining jurisdiction like Australia has a lot of value compared to an aspirational development project in other parts of the world where there might be significant social pushback and where approvals aren't in place. And, there's a bit of not in my backyard syndrome going on in regards to, lithium projects that are looking to be developed in Europe and the US.
Yeah, we've talked about a few of those. I mean, so you've been doing the rounds today, talking through the numbers. What are some of the big questions that you've had to answer that people either disconnect between what they understood or didn't understand, or questions about what you need to do next for them to get over the line?
Yeah, well, essentially the project is ready to build. Okay, so we've got finance markets that are keen to support us. We've got customers that benefit from supporting us in building the project. It's fully approved. It's ready to go. We're there at the right time. It's really just about sort of implementing the plan now, Matthew.
But I know, but that's what I'm asking is like, what's the bit that they want to see you do? Because, if you made the announcement today and they thought it was all singing, dancing, your stock price would have gone shooting up, right? They said, right, we've got to get into this thing. It's the next best thing. What do they want you to do before they start piling in? What did you hear today?
I think it's about sort of understanding the story. I think we've had some really good feedback on the back of the feasibility study. I think the market sort of is about to get there, Matthew.
Yeah, but I get, sorry to push you on this one, because I think it's important for people at home to be able to go, oh, okay, so if that thing happens, this is something I should put my money into. So which is what? It's all ready to go. Is it just come down to you need to come back with the financing structure in a timely fashion? Is that the moment that people should be looking for? Is that what you heard today?
I think where I suggest that the market's looking for is that as we move into production, as the project's further de-risked and we start to get valued as a producer, there's currently no Australian spodumene producer on the ASX that has a market cap of less than $2 billion. As we move into construction, into production, the market will start to value us on future cash flows. I think currently the market's valuing producers around the globe at about 20 times EBITDA. Put those two numbers together, that puts our valuation as we become producer multiples above where we are now.
Okay, Stephen, look, good to see you today. Well done on the numbers. Stay in touch let us know how you get on with that financing, because I'd be keen to see that stake put firmly in the sand and allow you to move on. Yeah.
Now we'll see. Well, we are very confident that'll be completed in the next few months to enable us to start construction of the project by the end of this year. There's a lot of interest in supporting us in that process.